as we move into this week, you saw 3 weeks of very positive tones across US equities, and that's washed across, I think, most equity markets. And how are we going to move into week 4? It may be another lift up. So I think the jury's out yet whether it's going to be a solid move into the last 6 weeks over to New Year's Eve. But overall, I think it's going to be relatively positive.
All right, well, let's take a look at the performance of some of those key assets, particularly in the commodities and currency space. What are you seeing here, Pete?
Well, gold's had a big lift up in the last couple of sessions, Andrew, and it's really nudging that, close to 2,000 again. It's 1984. WTI, crude oil and Brent both had a solid move after being spanked down heavily on Wednesday and a little bit of Thursday. They've really, come back with probably a 3 or 4% move to the upside. Where you're looking at euro versus pound, the euros again gained strength, the Aussie's stronger, US dollars come under some pressure to the downside. You're now running that US dollar index under 104 at about 103.80. So there could be further softening there as far as Fed's stance with raising of rates. And then you move all the way to the bottom there where you see euro versus Japanese yen and how the yen's performed. And, that's still languishing. So, a very interesting week for commodities and currencies.
Pete, let's talk oil. Received a good bounce on Friday. What's a lot of speculation there about what OPEC Plus is going to do next?
Yeah, I noticed in the front page of the Financial Times over the weekend, Andrew, and that was that really demonstrates, I think, to all the viewers out there, that's a global newspaper, as far as OPEC's stance with Saudi Arabia and what's expected rolling into Q1 and possibly even Q2. As far as continuation of those cuts, they're not happy with this oil price, and neither are the Russians. And there's an OPEC meeting on the 26th of November. I'd normally attend that in Vienna, and I'm expecting fireworks because they're wanting 85 to 90 bucks a barrel. And I think at this current situation, it's probably too low. So they'll look at how they're going to continue those cuts moving forward and how Q1 is going to form over the next after naturally January 1, where are the geopolitics? Where are the US dollar index? And naturally, the crude price is bumping higher.
Pete, let's focus on the US economy and speculation about whether the Fed is done, of course, but just where that growth is tracking. And also those treasury yields coming off quite significantly. The 10 years off about 40 basis points just over the past 2 months.
Yeah, exactly right. It it had a big push up, and then all of a sudden it's capitulated a fair bit. So that's a little bit of a wake-up call for the bond traders, as we know. But when you're looking at the inflation, it cooled, in more than expected in October. And you had the second part of that, Andrew, was naturally weak job numbers. So in turn, that's a 2-hit, 1-2 combo, which the Fed looks very closely at, naturally, labour market and inflation. So is it going to be 50 basis point cut sometime in 24? Many market analysts are saying could be up to 100. So there's a little bit of, argy-bargy there, but you look at the dot plot and where it moves forward into 24, and it's certainly, coming down where we see, action from central banks. Everyone's got a different opinion, but more importantly, I think some banks are going to be far different in their strategy versus something like, the UK and naturally Eurozone. So they could be continuing updraft, and the Fed funds rate could actually be cutting.
Yeah, and you only have to look at the US dollar, Pete, to see what's going on there. I guess reflecting, well, we had a bit of a disappointing jobs report there, but also the likelihood of, what's to come. What are you seeing with the US dollar at the moment?
Well, I think it's got to have probably more downside pressure, Andrew. It's, it's under that 104 handle, maybe a 103. It could bounce, but it's really been, pushed down hard over this month. And as you see on the chart there, nearly a 107.50 down to a 103.80. That's a monstrous move in only, 2 and a bit weeks. So if that can continue its downdraft, have a look at the Aussie. It's really bounced and bounced strongly. You're sitting there now, the best part of 65.10, 65.15, and that's really been, a glory trade from those lows, as we were talking only a week or two ago at 63.5. It's really bounced and bounced solidly. So I wouldn't be surprised to see more than move to the upside for something like the Aussie against the US dollar in the short term.
Yeah, so where can you see the Aussie going, certainly by the end of the year then?
Well, I mean, we're going to see it's still a lot of water to pass under the bridge, but I wouldn't be surprised possibly sitting with a 66 plus handle, might be 67, Andrew. It's so volatile, the Aussie, and on any given day it can have a huge swing. It can be in a 1 cent move. So yeah, I'm thinking possibly that 66, 66 and a half, 67.
Yeah, of course, it has been under significant pressure for the entire year, but not as much perhaps as the yen.
No, very much so. And just on the Aussie again, I mean, I want to see where the job numbers are, and I want to see where our central bank is.
Yeah.
As far as minutes and general, viewpoints, and that could also add more horsepower to the Aussie. Yeah, the Japanese yen is just 149.60 at the moment. It's been an incredible market to trade, and you only have a look at that window there from the start of the year, running at 128 roundabout, all the way through to 150. It's just been an incredible market. And then, if you lay that, the spread between, as you can see there, the differential, that's really a wonderful graph to show, because for, beginner traders, they look at the bond market and they say, well, what's happening as far as the spread between a US versus a Japanese bond? And there it shows you how the currency really, is glued to it. You can learn a lot from your technical analysis and laying different charts over different ones, and it's a great way to, I think, educate oneself to the dynamics of currency trading.
Pete, let's take a look at what's going on in the Eurozone at the moment. What's going on? Not enough, clearly, because economic growth is stagnating to the point where, well, is it going to deteriorate from here, do you think?
I would think so, Andrew. I mean, you're looking at the export-driven model of Germany and what's happening as far as the buying of, look at motor cars or finished goods, and it's a really tough market. We saw that demonstrated by China only, a week and a half ago. Their numbers were very, very poor from an export, and we're seeing the same thing happening across Eurozone. So when you're thinking, where are they going to dig themselves out as far as, more exports, well, you've got to have a strong global market to buy those finished goods, as we know. So I think it's going to be a tough, hard grind over the winter period for the Eurozone, and naturally also into UK. So I'm expecting a little bit more doom and gloom.
All right. Now, Pete, of course, we've already spoken about gold. It's had a good couple of weeks, certainly as those yields and the US dollar have come off. What are you seeing with digital gold at the moment? Bitcoin. Obviously continued speculation about very close to regulators in the US approving a spot Bitcoin ETF. So how's this all been reflected on those prices?
Well, I think that's exactly it, Andrew. How is it reflected in price? It's back up 37,100 at the moment. It's had a big bounce even yesterday. It was up the best part of $400 or $500. So it's solidly bid up, and you look at the chart there. Possibly 40,000 has got to be the new handle that you think, right, is there going to be some form of resistance there? But it seems to be onward and upward. And as you mentioned, with that introduction or possible introduction as far as ETFs and how the world starts to embrace them, it's just had an enormous rally this year, and you can't dismiss it at all. From 15,000 or 16 all the way to 37, it's showtime.
Yep. All right. So overall, Pete, of course, this week also the US, they got Thanksgiving Day on Thursday. Then you're into, holiday shopping season, aren't you?
Absolutely, Andrew. I'm expecting big numbers as far as, that Friday, and, the whole mood. And we've just got to see whether the US consumer and the global consumer really embraces it, or are they tapped out as far as their credit cards? How are they looking for Christmas? Are they, the footprint of the consumer really dictates Fed policy and, of course, the overall global health. So, they're numbers that really one needs to analyse, and probably early December we'll get a snapshot as far as the resilience or the reluctance of the spender.